Welcome to this episode of Realizing Revenues. I'm your host, Jeff Bladorn, and I'm the Chief Revenue Officer at Wealth Access. In each episode of Realizing Revenues, we spend time with key executives from bank and wealth management firms and other industry participants. Over the next 20 to 30 minutes, we'll learn about real-world business challenges from the bank and wealth management industry. We'll also discover how firms are using technology to meet the demands of modern consumers and to realize revenues. Today, we're joined by Linda Gu, Executive Vice President of Sales and Marketing at Supernova Technology. Linda is a transformative leader with 2 decades of proven success in developing, launching, managing, and growing SaaS-based businesses globally. She was part of Morningstar's senior leadership team, and during her career at Morningstar, she took on various senior leadership roles in product management, product development, sales, and marketing. Welcome to the show today, Linda, and thanks for joining us.
Jeff, thank you for having me.
I'm looking forward to an interesting conversation, so thank you for taking some time. Let me just start by sharing with the audience that this relationship between Wealth Access and Supernova really started as a result of the Wealth Access Client Advisory Board. Our Client Advisory Board gives us a sounding board that we need to make sure that we're on the right path to creating maximum value that changes the lives of the consumers that our clients serve. We're thrilled with the collaborative discussions from the recent Wealth Access Summit that led us to finding a solution to reduce time that high-value people at regional banks and wealth management firms spend on administrative tasks and trying to get customers to perhaps share documents that they really don't want to take the time to do in the first place. In this case, it's really about providing enterprise-level, cloud-based, securities-based lending technology to the advisory market overall. So Linda, maybe you could start by just telling our audience a little bit about yourself and a little bit about Supernova.
Absolutely, Jeff. I will start with Supernova. Supernova is a financial technology company. We provide a digital, to your point, a digital enterprise security-based lending solution to enable private bankers and advisors to help their customer gain fast access to liquidity through security-based lending line of credit setup. By doing it, private bankers and advisors can build a deeper relationship with their customers. In return, they get to retain assets that otherwise may have to be liquidated to cover investors' cash needs. And oftentimes, they get to benefit from additional assets getting moved over as a result. I joined Supernova about 3.5 years ago. Prior to that, I spent almost 20 years at Morningstar. I remember when I first joined Morningstar, Morningstar was barely 30 million in annual revenue, 300 people. And when I left Morningstar in early 2019, the company just reached $1 billion in annual revenue. So it was a great journey, certainly hope transforming Morningstar to become a global leader in financial services as an independent financial service provider with industry-leading data technology, research and money management services. And frankly, I joined the Supernova because I was convinced the Supernova was building something innovative, and really believe the lending technology space is underserved market. And it's been a fun journey so far at the Supernova. Frankly, my passion is about building innovative technology, helping investment and the wealth management professionals solving their challenges, helping them to be more successful. And that's exactly what we are doing here at the Supernova.
So thanks for that background, Linda. And You were able to join us at that recent Wealth Access Summit, and we had a session on securities-based lending, and there was a lot of energy in that room around the concept of securities-based lending, but not necessarily every firm was real familiar with it. Maybe just some basics as to just what securities-based lending is all about.
Sure. Yeah. In a nutshell, security-based lending is a credit product that allows an investor to pledge their non-retirement investable portfolio as collateral and borrow against it to cover their cash needs. So historically, this type of a loan is only available to ultra high net worth and the high net worth investors. At Supernova, we believe every investor should have access to a line of credit to the extent that if they have a non-retirement investable portfolio. And our mission is really to democratize access to security-based lending to serve a broader segment of investors, including the mass affluent.
So that actually helps to set things up rather nicely. And again, going back to the advisory board, they also have helped us to understand that great technology by itself does not necessarily drive full adoption, right? There has to be clear value, in our case, to the investor and to the advisor. And of course, it has to be operationally efficient in order to drive scale. Now, I'm sure that adoption is a risk with the securities-based lending program as well. And that's one of the reasons that the board was so excited about the combination of Wealth Access and Supernova. Right? Wealth Access can help to drive the collection of the client data that's needed to inform the SBL program, and then efficiently provide that data to the Supernova platform that in turn can digitize the end-to-end SBL process, creating an environment that can help to drive higher levels of adoption. Now, Linda, you've worked with a lot of firms in support of securities-based lending programs. What do you see as some of the challenges that firms have with scaling an SBL program?
Yeah, Jeff, that is a great question. I would say the top three challenges that consistently comes up. There are three key challenges that consistently comes up in our discussions with our customers. The first is really tied to manual, cumbersome application process. Depending on the firm, the current state for many bank customers, and frankly, to some extent, RIA broker dealers who offer this product as well, is it can take anywhere from 5 to 7 days up to, in some cases, even 90 days for an investor to go through the application journey and waiting to get their application approved and getting a line set up, so that cumbersome, lengthy application process ended up deter a lot of investors from adopting security-based lending, because as you know, when people need access to cash, a lot of times they need access to cash fast. So having to wait that long to get access to liquidity is really a key deterrent for the adoption of the investor to use a security-based lending solution. The second challenge comes down to lack of visibility. The current state today for a lot of firms is that once a line is approved and set up, private bankers and advisors don't really have visibility on what is going on and how their customers are using the line of credit. So as a result, there is this fear with private bankers and advisors not knowing what's going on and don't want to put the customers in trouble. As a result, they stay away from talking about security-based lending product with the customer. So again, that deters adoption of advisors and private bankers to really use the security-based lending as part of the toolkit to help deliver holistic advice. And the third challenge really comes down to collateral monitoring. We hear many banks telling us that, well, gee, we know there's a lot more we can do, but we don't know what's going on with a pledge to collateral and how the day-to-day market movements are impacting our loan portfolio. As a result, we can't do more. So those probably are the top three challenges we consistently hear from our customers.
And significant challenges that does represent. And I imagine that, some firms that view those challenges perhaps back away from putting a full-blown program in place. But for those firms that can overcome those challenges, a securities-based lending program can really be a kind of a win-win-win scenario. Can you comment from your perspective on how that sort of comes together?
Absolutely. Yeah. I will use a recent example. Before tax due day this year, Supernova saw a huge surge of investors drawing on their security-based line of credit to pay for their taxes. So had it not been the case that these investors had a security-based line of credit set up, at least some of these investors may have to liquidate a part of their portfolio to cover this cash needs. So, if they ended up doing it, they probably will have to pay, realize the capital gain if they had a capital gain, or alternatively, if they had a capital loss, that means they basically materialized the loss in the down market, which is less than ideal as well. So it is a win for the investor because they are able to get fast access to cash to cover this cash needs without disrupting their investable portfolio in the down market. And it's a win for the advisor because the advisor now has a happier customer that otherwise would have, probably experienced a less than optimal outcome compared to having a line of access. And the advisor gets to keep the asset with them as the result as well. It is a win for the firm because, with a lot of investors are leveraging security-based line of credit, they're able to grow their lending book and certainly benefit from revenue, growth that comes from the interest, payment.
Sure. So some real, very practical benefits, not only to the firm, but also to the client. It starts to drive that overall kind of winning solution there. So back to some of the challenges. One of the areas that you mentioned, and an area that I imagine is a primary consideration, is risk, right? And that this business model starts to potentially expose an organization to different types of risk than what they might be managing today, right? So, collateral risk and market fluctuations. I imagine there's some regulatory considerations that come into play. How does the Supernova solution help firms to manage that risk?
That's a good question, Jeff. You're absolutely right. Risk is always a top of mind for any banks. And one of the first challenge when we ask our bank customer what are their challenges today is about the collateral monitoring. So the current state for how many banks are monitoring their collateral is it's a very manual and Excel-based approach. So, back in 2020, when the COVID hit, when the market dropped to 30%, and earlier this year, when the Russian and the Ukraine war broke out, and when the market dropped significantly as a result, we hear many of our bank, prospects are telling us, well, gee, we really don't know what's going on and how those market events and volatilities are impacting our loan book. So despite many banks recognizing there's a lot more potential for us to do more loans, that lack of automated solution to monitoring the underlying collateral, it has really been an impediment for many banks to scale their lending business. At Supernova, many of our leaders came from previously building innovative technology solutions for investment wealth management professionals at companies such as Morningstar. So building technology solution with focus on data analytics, data insights, and surfacing actionable information to really help people make decisions is a core part of our DNA. So we've built our collateral monitoring and management solution not only to provide a comprehensive overview of the entire loan book with daily, and frankly, we can do real-time mark to market. So everybody have that, comprehensive perspective about what is in their portfolio. We also provide risk professionals and credit professionals with very robust stress testing capability to allow them to anticipate what could happen to their loan book if certain market conditions happen, or if certain conditions happen with individual stocks. So it's a very, very powerful tool that allows a firm to get ahead of a potential risk in mitigating them ahead of they actually happen. And in the worst case of scenario, let's say if collateral calls ended up getting triggered, which is probably part of life, for lending business, Supernova provide a very streamlined workflow to really enable operation staffs to effectively managing those collateral calls with efficiency at reduced cost. So, I would say it's probably one of our modular capabilities that is most widely adopted because our customer recognize having an effective tool to help manage risk and supporting their compliance and reporting needs with well-defined reports is a critical element of scaling their lending business.
Right. So the replacing the manual spreadsheet-based processes with automation and with access to data not only reduces the risk that's associated with a program, but that's actually ultimately what drives the ability to scale that program and get the most benefit really across your overall client base.
Absolutely.
So Linda, one of the things that we promise our audience on Realizing Revenues is to talk about some real world results as well. Can you share what you've seen across some of your client firms when it comes to utilization, client loyalty, revenue generation by putting in place this automation that allows for risk management and scale across their organization?
Yep, absolutely, Jeff. Our customers have seen over 100% growth of their security-based lending business each year the last few years. And none of our customer has ever seen a credit loss. So I think that's a very, very significant outcome. We are very excited about our customer experience. Beyond that, many of our customers have seen significant cost savings. Some have materialized up to 85% reduction in cost for each line. And some of our customers have seen as much as 50% reduction in servicing costs. And frankly, beyond that, some of our research conducted with our customers pointed to there is significant benefit of new asset growth. We have some number pointing to $1 in security-based lending balances could lead to as much as $2 in net new assets getting moved over to the same advisor, to the firm, because when you pledge a bigger, investable portfolio by moving held weight assets over, that oftentimes lead to a lower interest rate that the investor is able to get as a result.
I won't use any names, but during the summit, I do recall one of our current clients, the leader of a significant private bank wealth management practice. His view was that every new relationship should be opened with the availability of having a line of credit available to them, even if they had no need to draw on it immediately. That seems to be a more prevalent view across the industry versus specific clients who have expressed that need and trying to service that. Have you noticed the same thing as a kind of a growing use case across the industry?
Yeah, absolutely, Jeff. In fact, that's what we advocate as well. I think sometimes people have this misconception that, oh, gee, well, having a security-based line of credit means I'm being asked to borrow more. That cannot be, far away from what we really advocate is having a ready liquidity option ready. So in case the investor needs access to cash and drawing on the security-based line is the best option available to them, then they have the solution ready to go. It is really, from our perspective, very similar to the fact that probably many of us have a credit cards in our wallet. I use my credit card every single time I need to pay for something. But every single month, I can choose to pay off the entire balances if I don't want to carry any balances. So it's really no different from what many of us are already doing, which is having a ready liquidity solution for covering your cash needs. And one of the things that Supernova does is we actually integrate it with our customers. So very much, from the first conversation a private banker advisor has with the customers, they can leverage our technology to really help facilitate having a conversation about not just investment advice, but which, as you can imagine, nowadays is increasingly getting commoditized, given the proliferation of services as provided by large TAMs. So what we really advocate and have helped our customer with is to have liquidity solution as part of the conversation at the get-go and help them to provide more values by providing holistic advice and advice beyond the investment. And from there, the customer can have a line of credit set up so it's ready to go. When the COVID hit, for example, in 2020, Supernova saw a huge surge of new applications for security-based line of credit. And why is that? Well, because people all of a sudden realize, oh, gee, my goodness, I need to cover this cash needs and need to find a way to do it. And security-based lending was a good way to do it.
Playing off of your comment about this really becoming part of that holistic advice, actually, I think that speaks to the combination of Wealth Access and Supernova as well, right? One of the things that Wealth Access does is we help our client firms to gain a deep insight into each of their clients' total financial balance sheet, including assets that a client may have with other firms or might be held in non-managed accounts. And of course, through the Wealth Access integration into Supernova, these assets can now also be exposed. So what do you think about accessing that information, held away account information, non-managed accounts, and how that can be valuable to an advisor and their clients as part of an overall SBL program?
Yeah. Jeff, I think having access to the held away information is extremely beneficial for the advisor. And I will give you a couple of examples for how that could be beneficial. The first is typically for the investor, if they were to pledge the held away assets along with the captive assets that's already with the advisor, that oftentimes can lead to lower interest rate. They will be able they will be able to borrow at. So our technology helps really quantify the potential benefit in lower the interest rate with the how-to-way information. We have a tool that's called eligibility estimator. So what it does is that the FA will be able to generate a proposal showing if the investor were to pledge the how-to-way asset, which, through Wealth Access, we will be able to see what it is and how much is the portfolio valued at, along with the captive assets, and what does that look like for them. So that's a real benefit from an investor perspective, and certainly it's a value add from an advisor perspective. The other example, I think that information could be helpful, again, from holistic advice perspective, if the advisor can see for this particular customer, this customer has, X amount of student loans and X amount of mortgages and X amount of, airplane loans, etc. That can lead to a conversation about, well, gee, I see you are paying $50,000 a student loan at, 6 or 7% interest rate. And really have a conversation about would it make sense for the particular investor to consider refinancing some of the higher cost of borrowings to security-based line of credit, which can lead to significant savings in interest they would otherwise pay. So I think it's a very powerful information. In some of our conversations with our customers, sometimes they talk about, oh, gee, well, we do lending through for how-to-way assets, but the way we do it is by every single month, we get this Excel or paper statement and we manually enter the data. It is a very cumbersome process that cannot scale and hard to scale. So I think Wealth Access provide a huge value add by making that information available to the financial advisor.
Yeah, so also a very good point on scale and the ability to extend this. I think there's another extension that comes to mind. So one of the things that Wealth Access works with our firms to do is to engage with prospective clients as well, right? And that might be through a digital experience that ultimately gains insight into that prospective client's investment portfolio. I would imagine that an SVL program and having that available as part of that process could be very beneficial to firms as they try to attract and win prospects. Any thoughts on that?
Yep. Yeah, Jeff, our perspective is having a digital, fast, and easy to use a security-based lending offering is it's not only beneficial, we really think it's critical for the success of the advisor and for financial institutions going forward. In fact, I think McKinsey recently conducted a research with wealth management firms that pointed to, I think one of the key findings through this McKinsey study is providing good banking services is becoming increasingly critical for the success of wealth management firms and for the success of advisors, and particularly security-based lending. As you know, many ultra high net worth investors and high net worth investors are used to having access to this type of product from the prior advisors or prior firm they work with, and oftentimes they have existing balances will need to get refinanced to the new firm or advisor they are considering. So we really think it's becoming essential to provide a digital, fast and easy to use a security-based lending solution from prospecting perspective.
So Linda, we've covered a lot of ground. I appreciate that. Any other thoughts that you'd like to share with our audience?
One thought, since our discussion pertains to revenue growth and tapping into revenue growth opportunities, one of the ways that Supernova help our bank customer grow is to do lending through third parties. So what we do, as we know, many banks today are flush with cash, and they are looking for opportunities to do more loans if they can keep a credit risk in control. So what Supernova does is we can connect the banks with third-party RIAs, broker-dealers, and allow a bank to lend, against those third-party held assets, because our collateral monitoring solution will be able to provide the bank's credit risk professionals with timely information about the pledge, the underlying collateral, for them to really keep the credit risk in control. So quite a few of our bank customers do that today, and we are hearing a lot of other banks expressing interest to either do this or do more of this. So I just want to share with the audience, certainly this is another way that Supernova can help our customer grow their lending book and grow the revenue as a result.
Great observations. Hey, Linda, thank you so much for joining us today, sharing your experiences and your observations. I'm certain that our audience came away with some ideas that they might be able to use within their business as well. So thank you.
Jeff, thank you. It's my pleasure.
And to our audience, hey, thank you again for taking time to learn more about how industry peers are innovating through the use of technology to address real business challenges and to realize revenues. Until next time, I'm Jeff Bladorn with Wealth Access, and we'll see you soon with more executive insights on realizing revenue.